Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our live feed and we'll have your questions addressed by our guests. But before bringing them on board, let's see what the global handover looks like. Wall Street is on track to post weekly losses. Nasdaq ends down by 4.6%, headed towards its worst weekly loss since June. Asian markets trend lower as well. Meanwhile, European markets saw a choppy trade yesterday, closing with mixed returns for the day. Stock 600 was down 0.2% after flipping between mild losses and gains during the morning trade. Tyre stocks, meanwhile, back home were zooming ahead. Why were they under pressure past 1.5 years? And what has changed now? We find out on the show. Stocks in the spotlight: Adani Port, Tata Power, MTAR Technologies and PVR. Okay, let's get going and discuss some of those stocks that are likely to be buzzing in this news or buzzing in trade today rather. Kunal Shah of LKP Securities joins us right now to talk technicals. Morning, Kunal. Before we talk specific stocks, want to understand what the setup looks like and what kind of a trading day should we brace ourselves for?
Good morning, Karunya. I think we have started the September series on a very good note, where we have seen the current uptrend which is there in the Nifty index and CAC. Now, September has been historically a month where there has been a lot of volatility, what we have seen in the current month as well. The structure for the index still remains bullish only. If I talk about Nifty, 18,100 is now a resistance on the upside. Once that is taken out, we are ready to hit the all-time high levels of 18,600, 700 also on the upside. On the lower end, we are seeing 17,700 to be a strong support on the downside. If I talk about today's trading session, if you get any dip into the market, utilize that dip to buy the index. We might have a range bound or a consolidated session in today's trading session because it's Friday and we are towards the weekend. So 17,800 is a strong support on the downside, 18,100 is a resistance. So this is a range what we could expect for trading. And similarly for the Bank Nifty as well, the outperformance has been clear-cut there in the Bank Nifty index, and I think that outperformance is likely to continue in the near term.
Okay, so let's also bring on board some of the stocks that are likely to be buzzing today, or at least reacting to news flow, if not buzzing. Lots of names to watch out for. The first one will be Adani Port. Their subsidiary essentially is looking to enhance Haldia Dock's capacity in West Bengal. They were signed a pact with Shyam Prasad Mukherjee Port, and they'll be creating a special purpose vehicle, an SPV, to manage bulk terminal with a 3.74 MTPA capacity for this particular Haldia Port. Talk to us about Adani Port and its technicals per se. We've seen a fantastic rally come by in most of the Adani Group companies, but can Adani Port sort of build onto these gains and extend them going forward?
Yeah, I think if I talk about the entire Adani pack, I think that has been one of the group which has been in the flavor in the last 1 to 2 years or so. Now, if I talk about Adani as a group, Adani Port is one stock which has not outperformed vis-a-vis its group companies. So I think the outperformance has just started in Adani Ports. I think on a technical front, the stock had recently given a falling trendline breakout around 900 zone. And that breakout, once it came out with volumes, the trend has been really strong. It is currently trading at 968, 970. So I think the bullishness is likely to continue in the near term. I am expecting the stock to be a 4-figure very soon. 900 is a strong support on the downside. Even if you get any dip, utilize that dip to buy the stock. Upside, we can see targets of 1,020 to 1,050 on the upside.
Okay, all right. Moving on from Adani Port to the next stock, which is Tata Power. Their solar arm has bagged a contract worth 612 crore rupees to set up a 100 megawatt project for SJVN in Gujarat. The project will be getting commissioned within the next 11 months. Talk to us about Tata Power. In fact, we get a lot of queries as well with respect to people who've already invested here. Good gains, very strong momentum actually seen last 2.5, 3 months. Can it sustain?
See, I think overall, if I talk about Tata Power, I think this is one stock which I think majority of the retail audience have in their portfolio as well. And I think that it's time for the stock to change its game. The stock has been a massive underperformance in the past, and now we have seen a sharp rally from 2020, what we have seen in the last 2.5 years. So the stock on the daily chart has been consolidating in a broad range, where we are not seeing any directional move at the current levels. But the setup looks very bullish. Like the Indian markets on Nifty, every dip is getting bought. Similarly, is with Tata Power. Whatever dip you get in Tata Power, that has been bought on the lower end, which clearly indicates the strength of the stock at the current levels. The stock is trading above its short-term moving average of 20 DMA, which is a positive sign. And the breakout on the stock will come above the level of 250. So 250 is an immediate hurdle. Once that is taken out, expect the stock to go towards the levels of 280, 290 very quickly in the next 3 to 4 days. So the setup looks bullish. The downside support is now held at 220. So as long as 220 zone is held, one should stay bullish on the stock. About 250, the momentum will start picking up towards 280 to 290.
Okay, all right. Let's move right on and talk about MTAR technologies as well. There's also an order win which could keep the stock hot in trade today. It's backed an order for clean energy segment worth 540 crore rupees. Talk to us about MTAR. I was looking at the returns of the last 6 months. There have been, highs and lows for the stock, but still, if you look at 6 months, it's still sort of in the negative. And not only that, but, the 2000 and above levels still kind of look elusive to the stock. Ever since the March, highs happened, it hasn't been able to climb back to those levels. So do you see that happening anytime soon for the counter?
That is the thing with the IT stocks, Karunya. We are seeing markets trading at 52-week high, and we are seeing IT Nifty or the IT index where we are seeing some selling pressure on the lower end. And all thanks to, I think, NASDAQ, where the major correction is happening, and that is why the tech stocks out here are also underperforming. But if I talk about MTR Tech, again, the underperformance was clearly seen. Now, in the last 1 month, the stock had entered into an oversold territory. We were seeing some positive divergence which were happening on the chart on a daily front. Now, the stock since the last 10 days was consolidating in a broad range where 1600 was a strong support, and on the upside, 1750 was a resistance. So this is a 150-point range in which the stock was trading since the last 10 to 12 days. Now we are seeing some buying action coming into the stock. 750 is one level which one should keep it on your radar. Once that is taken out, expect the stock to go towards 1820, 1850 kind of a level. So the setup looks bullish, already in an oversold territory. A bounce is expected where a good trading bet can be initiated.
Okay, all right. And the last one on our list today is PVR. There's some fund action that has taken place there. Grey Birch Investments has sold its entire shareholding in this particular counter by hiving off 22.06 lakh shares at an average price of 1871 apiece. Along with that, there's plenty private equity as well, which has sold some shares in the company. But it's the Grey Birch Investment which has completely exited this particular counter. Talk to us about PVR. Decent momentum seen last few months, but it hasn't been very consistent with it. So what's the way forward like?
I think again, PVR, I think the cinema stocks have been under focus in the last 1 month, where it related to what the Indian cinema is doing at the current levels. And similarly, that has been affecting the cinema stocks as well. Now, specifically, if I talk about PVR, the stock had seen a massive correction due to the COVID lockdown. After that, once the cinemas got open, it saw some rally towards its all-time high levels. But now, if I look on the chart is clearly showing signs of exhaustion, where we have seen some selling pressure at the higher levels. Lower high, lower low formations are there on the chart, which is clearly seen. The upside resistance on the stock is seen at 2000 levels, where again, whenever it touches around 1980, 2000 zone, it again sees some selling pressure. On the lower end, the immediate support is again found at 1720 kind of a level. So I think the stock is still an underperformer, lower high, lower low formation, clear-cut downtrend. I would not be very aggressive on the stock right now. If the bullishness has to be placed on the long side, it will be only above the level of 2000.
Okay, all right. Could I request you to stay on with us? I want to bring on board my colleague from Money Control Pro as well, who tracks the auto and auto ancillary space very closely. And tire stocks, as we all know, who were tracking the markets yesterday, were on a tear. So let's bring on board Nitin Agarwal to talk about what's happening in the tires basket. Morning, Nitin, and thanks for joining in. First things first, I want to understand what happened really. What is the big push that has been coming in for tire companies? Because they have been a slump for about 1.5 years. So what has changed?
There were two big main concerns for tire companies as a whole. First, increase in the raw material prices. If we look at since the first half of the FY21, the raw material prices have spiked up as much as 50%, putting a lot of pressure on their gross margin. In fact, the gross margin impact was around 10 percentage points, which is huge for the tire companies. So this has led to the significant deterioration in their financial performance. The second concern that tire companies had been facing was of the slowdown in the demand, primarily because of the reduction in the production by OEMs due to severe shortage of semiconductor chips. Now, what we are witnessing currently is the demand uptick from the OEMs as the ease in the chip is there, semiconductor chip is there. Secondly, what we are witnessing currently is the significant reduction in the raw material prices. For if you see, the natural rubber prices have peaked in the mid-June and have corrected by around 34% for Thailand spot and 12.5% for RSS for Kottayam from its Q1 FY23 high. So this is the particular thing which is causing the tire stocks to, buzz in the market.
Okay, but how are raw material prices likely to play out? Is it going to be a relief in the near term, perhaps for the next 2 quarters of this fiscal, or is it now going to subside and be like a slightly medium to long term trend?
What we believe that the raw material prices are here to sustain at these levels. They might not fall further, primarily because of the increase in the demand that we may witness after the significant fall. The impact of this fall we may primarily see from the second half of this fiscal, not necessarily because the impact generally comes with a lag. So what we are estimating around 300 to 400 basis points of gross margin improvement in the near term, and if the prices sustain and the demand continues to improve, that we may have around 5 to 6 percentage point of improvement going forward in the gross margin of tire companies. Yeah.
Okay, all right, fair point. What exactly is the demand scenario like? Because what we understand is that replacement demand did bounce back quite sharply, but are OEMs also now, increasing in terms of traction, in terms of demand? Is it healthy enough for these companies to sustain an upward trajectory in their numbers now?
Yeah, definitely demand is a big factor for the in fact the raw material prices benefit to pass on to their gross margin and ultimately to their operating margin. What we have been witnessing for last 2 to 3 months from the monthly wholesale number reported by OEMs is that there has been a significant uptick in their production and the wholesale demand. As earlier indicated that they had been facing severe semiconductor chip shortage, but now they have found the alternative sources of supply and the shortage of the chip is easing as a whole. So they have increased their production, and which ultimately is getting reflected in their wholesale number. So what we believe the demand from OEM is continuing to improve. It is not only one segment which is witnessing the significant demand. If we see commercial vehicle segment, passenger vehicle, two-wheeler, all these segments are witnessing a significant demand growth. And so overall the demand looks very good from OEM side. Replacement segment has also been witnessing a significant quite uptick in their demand. And we believe that the replacement segment has been holding up since the COVID time. So we believe that this demand will continue to hold up and be strong going forward. Yeah.
Okay, all right. I mean, yesterday, of course, we saw SEAT being the big star performer amid all of the tire pack. But of course, if you look at an MRF, a heavyweight like MRF was up 7.5%, Balkrishna Industries, most actually tire companies were flying yesterday. Does Money Control Pro have any favorites within this pack? Any stocks that you are more optimistic on than the others?
as of now, given the situation of raw material prices, we believe the all tire stocks should do phenomenally well. But within the pack, if we see the MRF, which commands premium valuation, has been commanding the previous valuation since long, and we believe that it will be the outperformer of all. Apart from that, what we believe that the CEAT and Apollo Tyre, which provides quite a lot of valuation comfort right now, and they have a good mix of their customer segments. So we believe that CEAT and Apollo Tyre could give you more alpha than the MRF per se. So what we believe, we will bet more on the CEAT and Apollo Tyre, and MRF will definitely continue to be there for a long-term period of time.
Okay, here's hoping. Thank you so much, Nitin, for joining in and for talking to us about what's happening in the tyres pack and why we saw such a fabulous momentum yesterday and why things could actually pan out well for these companies going forward from these levels. All right, back to technicals once again. Kunal is standing by. Kunal, a lot of queries coming your way, so brace yourself. The first one we want you to address is Vedanta. Naveen has written to us and he wants your view for the long haul. How is it looking?
See, if I talk about the metal space, Karunya, metal has seen some sharp correction in the recent times. Now, if I talk specifically about Vedanta, even on the long-term chart, even on the weekly or even on the monthly chart, if you look at its structure, the stock had seen a massive correction from the level of 425 to 200. So the stock had almost half. Now we are seeing some rally that has been coming up in the stock towards the levels of 314. Now there has been a lot of news surrounding the stock regarding the Foxconn investments or the semiconductor investments, what they have been doing. So there's multiple news flow which is there in the chart, which is there in the stock, and even the chart is telling it that there is no such clear view from the current levels where it could go on a higher levels or no. On the lower end, if I talk on technicals now, the support level which one should track is around 270. That has been a base on the lower end, and 325 is a resistance on the upper end. So the fall, what I'm talking about from 425 to 200, the stock has exactly retraced by 38.6% on the technical charts. So now the stock might go into a consolidation. There are a lot of news flows at the current levels. So I'll be not aggressively bullish at the current levels for a long term. I will actually wait on a wait and watch list how the stock pans out in the next 1 month, and probably then we can decide a clear-cut picture on the same.
Okay. All right. Moving on from a heavyweight to a small cap, Jamna Auto, Vish KL is writing to us and he wants your view on this counter. Now, Jamna has been trading in a very narrow range. If you look at the last 1, even 3-month move, it hasn't yielded much for its investors. Do you think it could break out of that pattern anytime soon?
See, if we talk about Karunya, the auto ancillary, I think this has been the space which has been buzzing a lot since the last 5 to 6 months or so. You name it, any auto ancillary companies, we have seen some massive outperformance in the last 5 to 6 months. Specifically, if I talk about Jamna Auto, I think the stock is in a consolidation phase. Whenever it comes near its 200 moving average, which is at 111, we have seen bounces on the daily chart as well. So whenever it touches its 200 DMA, we have seen some rally. So on the lower end, the 200 DMA is placed at 111. The stock is in a consolidation phase. The breakout will come only above the level of 126. So the structure looks very good. I think the momentum will likely to continue on the upside. You can add positions at right now as well, 111 being a very strong support, but the real momentum will start above 125.
Okay, all right. Moving on, Vinay is writing to us and he wants your view on IDFC First Bank. Good momentum, slow and steady, but decent momentum seen last 2.5, 3 months from 30 rupees levels to now at above 50 rupees. Do you think it's a good time to enter?
See, I think if we talk about the Bank Nifty Index, we have been talking that it has been a clear-cut outperformance in the last 2 to 3 months where Bank Nifty has significantly outperformed Nifty as well. So banking is going to be a theme going forward as well. If I talk about IDFC Bank first, the stock has seen a good rally from around 25 zone to 50. So almost it has doubled from the lower end. And now the stock is trading around 52, which was its previous swing high as well. So 52 was the level from where we had seen a sharp correction, and now we are seeing some volume buying which is happening over there. So I think a sustainable move above 53 will again trigger for further upside towards 60, 65. So the risk reward for a trading perspective at the current level does not is very attractive. Any dip you get, that could be utilized. But if somebody wants to look for an investment purpose, definitely the structure has changed on the daily chart as well as on the weekly chart. Keep on adding on dips. We can see levels of 60, 65 on the upside.
Right. Okay. Let's move and change gears from banking to healthcare. We're getting a lot of questions actually today on Metropolis. One of them is from Abhilash. He's probably already invested here, so he's asking if he should continue holding or sell his investment in Metropolis. From its recent high of 1590 rupees or 1585, 1590 rupees, the stock has slid a fair bit last couple of weeks. It has tried to sort of bounce back, but hasn't been able to do so successfully. Do you think one should still hold on to it at this juncture or add more perhaps if it consolidates more?
See, I think if I talk about the healthcare space and specifically about the lab stocks, that is Metropolis or a Laurus Lab or any lab stock, what we talk about, we have seen some massive correction post-COVID. I think these were the stocks which are there in the flavor because of the COVID issue where they had an advantage. Now, after the COVID is over, we are seeing some massive correction because the valuations definitely on the charts also look very expensive. Now, we have seen some decent correction in the stock on the lower end. The stock has been consolidating since the last 2 months. I can say it has been consolidating in the range of 1350 on the downside, and on the upper end, 1600 has been a resistance. A 2-month consolidation phase, which is happening at the current levels. So if someone is holding right now, I would not suggest it to exit because we might see a bounce which would come into the stock as well. So I think the bounce could come towards the levels of 1800, 2000 as well. I think that bounce could be an opportunity to exit your positions on the long term because laboratory is a space where the entry barriers are not very high. A lot of people are entering into the lab space. Even Lupin is entering. So the competition is going to be very high going forward, and the margins will shrink on a fundamental perspective as well. So even on technical and on fundamental, I don't think there will be much alpha or the power performance which will be there. So any bounce you get, that would be an ideal opportunity to exit this now.
In fact, you were talking about Laurus Labs as well, and we're getting some queries there. Adi Rao is one of our viewers who's writing to us right now on Laurus. Can you elaborate on Laurus as well, or is the pattern and the trend largely looking the same?
So I think if I talk about Laurus Lab, I think again this was one of the street favorite when it comes to the retail audience. The stock had seen some massive outperformance from the 2020 levels as well. Now the stock on the lower end, 435 has been a strong support where we had seen multiple bounces from those levels. And the higher end, if I see the resistance zone, it is 620. So this is a 200-point range in which the stock has been trading. Relatively, if I compare with the other laboratory stocks, this stock has been relatively very stable. So I think the dynamics of this will going forward will change. The stock looks much more healthier compared to its competitors, and we might see some rally even on the higher end once 620 is taken out. So I would not say to exit the position if you are there. I think hold it on. 430 is a level which you should watch into your radar. If that is taken out, then there will be some panic selling that will be coming into the stock.
All right. Okay. Last query for the day, real quick then. Abhishek Kumar writing to us wants your advice on LIC. There's not much of a historical pattern to track here, but can you tell us where it's headed? Because last 2 months, it has given up once again that momentum it picked up, 50 rupees off from its recent high of, I think, 719 or 720 bucks. What's the way forward that looks likely right now?
What has happened in LIC post the IPO, the stock has seen some massive correction from 920 onward. The stock has come to 650, 660 kind of a zone. Now on the daily chart, if I talk about, the trend is changing from the current levels. So we are seeing even on the RSI front some positive momentum being developed. 50 above 50, the RSI has now entered. I think 60 will be the level from where the actual strength will come into the picture. So the stock is trading in a downtrend currently, but it's on the verge of a breakout, and that breakout level is 690. I think in the last 2 to 3 days, what we have seen is good accumulation on the lower end, which is a strong indicator from the current levels. The lower end support is now placed at 650, which I mentioned is a strong support. So even from current levels, one can add into 650 would be a stop loss on the downside for any risk management, and on the upside, 695 is what I'm looking at. And once 690, as I said, is taken out, even the stock might go up to 710, 727. So a good kind of 6 to 7% move, what you can get from the current levels, a good risk reward ratio as well. So definitely it's on the buy list.
Okay, Kunal. We're running out of time. Can you quickly tell us what are the two stock picks that you have identified for our viewers?
So I think as we are be seeing that the markets has been trading at the all-time high levels, and this what we call about divergence. The US markets are trading near 52-week low. We are trading at 52-week high. So I think the divergence is clearly cut seen, and the next 1 to 2 years, what we are going to see is a massive outperformance in the mid cap and the small cap space. So my first pick over there would be from Power Grid. The power stocks are looking very good on the charts, whether it's NTPC, whether it's a Power Grid, or whether it's a Coal India. The Nifty CPSE index is on the verge of a breakout where I can see the momentum being continued. So Power Grid on a technical front has given a falling trend line breakout. Good accumulation has happened on the lower levels. Currently trading at 235. One can buy at the current levels as well. 225 is a strong support. The immediate target, what I'm expecting on the upside, is 250 to 255. So Power Grid looks very good from the current levels on a positional basis. The second stock, which was buzzing in yesterday's trading session, was the gas space. You talk about IGL, MGL, or Gujarat Gas. All the stocks were buzzing, and I think the momentum is likely to continue on the upside. So IGL on the daily chart has again given a fresh breakout in yesterday's trading session. With volumes. Now on the higher end, what I see, the stock is currently trading at 435. So the lower end support is now at 425. The higher end targets, what I see is at 450, 450 kind of a zone. So IGL looks very interesting on the weekly as well as on the daily chart. The momentum is likely to continue in the entire gas space, which is likely to pick up the stock as well.
All right, Kunal. Thank you so much for flagging off these stock picks and sharing your thoughts on the markets with us. On that note, we're wrapping it up right here on Morning Trade. Thank you for watching.